Hello and welcome to today's NinjaTrader Ecosystem webinar event with Adam of Boss Trading. My name is Tiffany and I'm a platform representative at NinjaTrader. But before we get started, I'd like to mention that it is important to understand that there is substantial risk in trading commodity future contracts and forex. You should carefully consider whether such trading is suitable for you and will depend on your specific circumstances and financial resources. It is possible to lose all funds deposited with your broker and even incur losses beyond these amounts. Please inquire at the link provided for more information or for a copy of the CFTC full risk disclosure. Also, please remember that these training webinars are not a solicitation nor recommendation, but simply educational in nature. This webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to the NinjaTrader brokerage. With new tools added nearly every day, the NinjaTrader ecosystem is home to hundreds of apps and services. You can quickly and easily find the tools or services you're looking for with a simple keyword search. You'll also find information about upcoming webinars and on-demand video archive to view event recordings at the link provided. For up-to-date information, be sure to like and follow the NinjaTrader ecosystem on all social media platforms. NinjaTrader is always free for advanced charting, strategy backtesting, and trade simulation. And if you're just getting started with NinjaTrader, we offer free live training on a daily basis. We are very excited for this unique event in which Adam will demonstrate trading's big levers for independent traders. Thanks again for your attendance today, and without further ado, it is my pleasure to welcome to the NinjaTrader webinar room, Adam. Please take away, Adam.
Hi everybody, welcome. My name is Adam Fiske from Boss Trading. Thank you for taking time out of your day to cover siding with traders who outrank us, fading those who rank below us. Now, a brief bio on the slide because it's relevant. It's my observation most successful traders have worked within the industry. How I trade each day is built on the training and knowledge gained from my nearly 20 years in the industry. And drawing on that experience, I'm going to focus on what's applicable to independent traders, as that's most of us here. All of us are on the trading path, but regardless of how far along we are, the goal for today is to walk away with 1 to 3 aha moments that propel you further along. And to squeeze more out of our time, you'll get links to tutorials and real trading examples on the levers we'll cover. Just like the link on the slide, all links have the same prefix, just the last 3 characters change. By making a note of the first part now, anytime a link is given, you only need to jot down the last 3 characters. Let's kick this off with a 3-minute clip of what the right skills can do. While watching the footage, ask yourself, what skills are being demonstrated? I'll give you a hint. I want to be on the same side as traders further ahead of me on the trading path, while on the flip side, I want to fade traders behind me on the trading path. Look at value. So if we get up to here, have a look at all of that offside selling. But at the moment, we're seeing this market being anchored to the downside by basically these sellers. But when we look at the way the market's behaving, you can tell that this is very much program trading dominated. There's people on the sidelines trying to make headway into all of those minutes. And so who's going to prosper when there's an absence of big players? A machine is just going to take money left, right, and center. That's what it's doing. It's just pinging this around pretty quickly, but you can see who the biggest group is here to get caught. I think that was a heap of just stops going off. This is accumulation and the market sold into that. The next time these orders appeared, notice how the market then rallied away from it. So I'm just trying to put the pieces together. If traders see these big orders in the book as magnets for the price to get back down to it after they've watched it a couple of times, then put them in again and you'll have traders come and hit the short side looking to pick up a couple of ticks, and then they become the fuel to help them move to the upside, but also it keeps out other buyers from getting in the way of this big buyer getting a decent run to the upside. Why would someone come in and hit that with some size here, even though you can see all of this buying down here? Because the last time a big order came in, that's what the market did. So looking for traders to try to emulate what happened before, but the market goes the other way. But isn't that bidding up now at a higher level? We haven't seen it before. Look at value here to here, and then finally it's shifting upwards. So you've got sellers coming in and selling into this. Now, I don't know who's going to win. I'm positioned on the long side and I'm just following what the market's doing. It's buyers coming in higher and higher. If the market moves up to here, this seller here and this seller, that's going to potentially fuel movement up here. And what else is up there? Well, I mean, where we are now, look at all the short inventory. It's huge. So what's nerve-wracking is, oh my God, it's taking so long. Maybe it's not going to go. But isn't that a trap in itself? The fact that it's not going up is going to entice sellers to come in. I'd say all of this buying, exclude the big buy, where there's 140 odd and there's a couple of 50s. The rest of it, that's that big buyer's competitor. That buyer doesn't want those traders in there, because when you're trying to take profits and you become a market maker, you don't want all these guys offering good prices to offside shorts. Notice the pace of the DOMs really sped up. That's done on purpose because it starts to tighten the screws. So I'm going to try and take some money up here. I was looking for shorts to get really hurt here, and I'm not seeing that. I saw the market go up, but it didn't pound offside shorts. All I've seen is that big players now taking their money. You know what it also does? Well, they took some partial profits, but also what they did at the same time is put a big message out to everyone. Let's go short here. And you're looking for selling to try to emulate it. Also means that all that selling, that some of the shorts who are offside are going, oh, we're okay. Here comes big sellers behind us. So they don't cover. They'll be leaning on that. So I can use now this as a launch for another buy. So someone who worked all that out faster than what I just did got in there. See the difference? So when you think about the different levels of trading skill, someone who worked out what was going on there faster than me is able to act faster than me. What does that do? That gets them, if they've done what I did, took money off, they're back in virtually at where they got out. And you know what? They've got a cushion. Now you're getting some short covering. You saw the way the market moved that time. And we know how many short traders are offside up here. So that big 200 there, is that trader taking profits? Given how big I think their position was and the fact that they've potentially now got completely out of it, I've got flat. Just took a long off these little multiple failures, this higher level. Not much of one, didn't get too carried away. From an odds perspective, getting back in wherever I did back here, that's much earlier in the deal, isn't it? This is much later, and we're in this little two-sided piece. So I'm adjusting my sizing accordingly. Back on side, but I keep seeing this bid disappear. There you go, it's gone again. Bailed out of that for a tiny loss. And I've gone long again. Quite often in the Aussie, you'll see it push down. I know that a lot of traders would look to typically get short, but what I saw happen is someone come in and seriously buy up. Look at that. Plus the multiple points of evidence, not just one. So up to VWAP's not a bad spot to be flat. In that clip, I was fading or taking the other side of lower ranked traders. The best traders outrank all other traders, which is why they make the lion's share of profits. If you can't nail as many trades as you'd like, then you just haven't moved far enough along the path. But if you do outrank plenty of other traders, then there are payouts up for grabs. The arrow line represents a successful trader's income journey. The ranking of traders explains why that income journey is non-linear. The further along that earnings curve, the steeper it gets because the number of traders keeping pace skills-wise drops away. Here's a question for you. When you enter a long trade, do you consider if other traders going long are ahead of you on the trading path? And how about those on the other side of your trade, i.e. those going short? Are they behind you? We can easily shift to quality over quantity to move further along the path. We all know damaging to trading accounts is overtrading. It slowly but surely burns through the account. But what would your trading look like if you had at least 9 evidence points to enter a trade? Isn't that a hack right there to cull overtrading? But using a number of price-derived indicators on a chart doesn't qualify. So let's cover examples of what do. Here's an example of what I mean using a recent short trade in the Australian dollar futures. The short trade is entered here, and the evidence is as follows. Number one, I have value being plotted intra-session bar by bar, and there's a hole in intraday value which is likely to revert. Number two, the market is currently dominated by a systematic trading model, trading within the first and second deviations of VWAP that's anchored to the London equities market. Number three, for the European time zone, starting with Germany, the white arrow is pointing to where there is a shift in traders accepting doing business to then no longer accepting doing business. Number four, which refers to this level up here, big picture wise, the market is currently trading below a significant transition in agreement, which is acting as an anchor to the downside. And number five of our evidence, the market maker or an HFT create a melt up in price on no liquidity. See how there are single digit prints in the volumetric or footprint bar, and see how the volume is then done at the top of the bars up here. And buyers who chase price up to get filled are doing so where? Well, they enter at the first deviation of VWAP, anchored to London equities, and the transition in accepted to less accepted prices for Europe, and at the big picture transition anchoring prices to the downside. And then, of course, there's that hole in intraday value beneath their entry, which is likely to fill. This is a set play trade for me, which I've seen many times before, and I know the odds are buyers will be forced to exit at lower prices. The point is, I can see a bunch of traders getting long who don't know about all the evidence we just covered. That ranks those traders lower than me, so I choose to fade them. Let's keep moving along the path. So I've referenced using at least 9 evidence points, but in the previous example, there were only 5. We all know moving from one small trade to another is not how you generate the best payouts, those 10 times, the 10 baggers. To achieve the large payouts, you use evidence points to come up with a big picture trade idea. But that big picture trade will consist of trading a number of pieces of a move, each having its own evidence points. What I'm saying is the 9 or more evidence points combine big picture evidence and short-term evidence all coming together at once. I reckon an example would really help here. The link on the screen will take you to live trading footage illustrating this. Let's now look at how we can identify so many points of evidence. To identify 9 or more evidence points to create a big trade idea where you can grab a number of the pieces of the move, you have to know what the market is saying. This requires expertise in key trader skills. And in the absence of anyone else coming out and listing, here are all the skills you need, I've provided a list. It's here on the slide. When you eventually make your way over to that list, you'll notice it's a pretty serious list, and that's because trading's a serious business. However, I'm going to give you a hack on how you can fast track being able to identify so many evidence points. Let me ask you this. How many languages can you speak and understand fluently? For many of us, it's 1. For some of us, possibly 2. And then the numbers really drop off when we start talking about 3 or more, don't they? Now, compare this answer to how many different instruments do you trade? You need expertise in nearly 24 key professional trading skills. It's just how it is. These skills are used simultaneously. So for many of us, myself included, the limitation of our mental resources restricts us to mastering these skills in a single instrument. But if you consider the entire competitive landscape of traders doing battle with one another, How many of those traders do you think would be on an equal footing to a trader armed with a significant scope of skills tuned to perform in a single instrument? I'd need an entire second webinar to cover off the set plays where I'm positioned further along the trading path than many other traders. If you want to receive live trading examples illustrating how I do this, you can subscribe to the weekly tutorials. Let's move on to another big trading lever. Traders swear by prep, which is short for pre-market preparation, but have you ever wondered what exactly is it? You know, how long does it take? What does it include? And most importantly, what's its real benefit? Well, I think prep is very misunderstood. So I'll cover the main points, starting with the most important one. My biggest trades come from prep. So that makes prep a big deal. I use a whole lot of studies to arrive at scenarios I envisage traders covering, because that's what leads to aggressive moves. And I've got set plays around these moves I like to trade. There are two links on the slide. The first is an example of prep, and the second is live footage of traders forced to cover and how I traded it. When you have complete skills applied to a single instrument and you combine multiple evidence points from your prep and hard right edge trading, something really interesting happens. You get a bonus major trading lever, which is you'll unlock uncrowded trades. Uncrowded trades are what the majority miss because the opportunity is unknown to them. Traders who are successful are approaching markets in unique ways to unlock uncrowded trades. This is well documented through the Market Wizard series and is often referenced by Dr. Brett Steenbarger based on his work with many of the brightest, most talented traders. What happens when you do the same as plenty of other traders? You give up edge because what could have been effective is diluted by so many traders doing the same thing. Guess where you are on the trading path if you're doing the same stuff as so many other traders? You just become one of the crowd, which is the bread and butter of the professional trader. On the flip side, take an uncrowded trade and your ideas are effective. You retain an edge and you get in early on moves before the crowd picks up on it. So there's more for you. I can't overemphasize enough how important uncrowded trades are for success. Another related point. Now, I bet most of you have heard someone say this before. Oh, look, I knew the market was going to do that. It's just that I got my timing wrong, or some other excuse is given. It starts with some analysis that leads to thinking, oh, the market's going to do X, Y, Z. And then the trader puts on risk. But what happens using this approach? So why does this happen? Well, let's cover that. The summed smarts of millions of traders, including those big enough to move markets, plus market makers making a market, that's what determines moment-to-moment pricing. Having a view on what the market will do next is like saying, I'm equal to that sum smarts. When you give that some thought, the only conclusion you can come to is, that's nuts. So let's change how we play the game. I've covered off a number of big levers you can apply to trading, but this next one finally tied everything in together for me. Now, it didn't come from trading, so I'll briefly relate the story. I was attending an Ashtanga yoga class with globally respected practitioner, Peter Sanson. Ashtanga yoga always starts the same way, reaching to the sky while standing. And that's followed by bending forward from the hips while keeping your legs straight until reaching your limit and ultimately touching your toes. With regular practice, touching your toes is actually achieved pretty quickly. So if you could touch your toes last week, you'll continue to touch your toes this week, and so on. That makes sense, doesn't it? Well, actually, Peter, who has stuck with a daily practice for over 30 years, explained that regardless of the thousands of times he's touched his toes, he's guided by moment-to-moment feedback from his body as to how far he can bend forward. His mastery is not that he can do all these crazy difficult postures. His mastery is never expecting in advance to what degree he will complete any movements in his practice. So how does this apply to trading? With the right trading skills, the list is online, your market comprehension reaches a level of you understanding what the market is telling you to do. I just explained how the yoga practitioner learns all the postures, but then is guided by feedback from the body for each movement. In trading, you learn the right skills, but then you are 100% guided by the market for every action you take. So whether it's entering, covering, scaling, scratching, being aggressive or defensive, the market guides you on all of it. So a serious point here. Anyone who has traded for any period of time knows, particularly in the early stages, of the roller coaster of emotions, like being fearful, anxious, stressed, all that fun stuff, right? And that tends to be followed by a large helping of beating yourself up, doesn't it? Well, when you have a boss and he or she tells you what to do, you just do it. That's the same deal here. Do you know how less stressful, how less mentally taxing trading is when you just let the market tell you what to do? That in itself makes getting properly skilled to know what it's saying worth it. You probably want to see this in action. Subscribers to the weekly tutorials receive live trading footage where I illustrate what the market's telling me to do. Moving further along in trading can be summarized as follows. 1, gain skills to unlock uncrowded trades. And 2, build expertise to let the market tell you what to do, so you can time your executions with the market's moves. There's a saying in trading I learned from a trader further along the path from me, and that is the second mouse gets the cheese. In the next 20 minutes, I'm going to email a link summary of what was listed, which is a thank you for hanging in there until the end. And by hanging in there right to the end, you are the second mouse getting the cheese. To make sure you get a copy, sign up to the tutorials as linked on the slide. And with that, I'd like to say thank you to all of you for attending. And of course, thanks to NinjaTrader for making it possible. And just one more thing, please feel free to reach out and let me know how you're going with what we covered. What was your aha moment? Which idea did you take on board and how are you using it? And how have you found your trading change now? You can easily get in touch with me via the Boss Trading site. So I'll hand over to Tiffany.
Thank you, Adam. Are you wanting to answer any questions within the chat room? We still have plenty of time.
Sure, happy to do that. Help me, Tiffany, to bring them up.
Absolutely. So that's going to be at the top of your screen in the chat window under the ellipsis button. So you'll have a menu item, ellipsis button, and then chat. Were you able to find that?
Yeah, I've got it. It's all fine.
Perfect.
Yeah, so if you've got any queries about what I've just covered, now's a good time to hit me up. So the screenshots of the software seem very busy. Do you mean when I was showing you how I'm following so many different charts of information? So what I want to do with trading, if you just think about what I was talking about, I want to make sure that I'm using enough points of evidence that put me further ahead than other traders. So I actually use quite an elaborate multi-monitor setup. Most traders would find that's the case. You know, it's typical for any of us when I was prop trading to have, you know, between 4 to 8 monitors. And that way, by monitoring lots of different data sources, so that could be some of the order flow tools, different VWAP calculations, footprint charts, and of course the tape, you know, and market depth. That way you can come to observations that are missed by some of your competition. So what I'm doing with regard to trading is making sure that I'm finding trades that other traders are not identifying, right? So picking uncrowded trades, using multiple points of evidence to come up with opportunities that a lot of traders just don't see. And that way you're taking the other side of their position. So VWAP is volume weighted average price. So if you're not familiar with that, it is available in NinjaTrader's Orderflow Plus suite of tools. Now, I don't want to give too much away here, but that is, without question, one of the most useful tools that you can use, particularly in the current environment, technology-wise, when you've got such a high percentage of automated trading. So if I go back a couple of steps, a lot of the big so I'm based in Australia, as you can probably tell by my accent. A lot of the big brokerage firms when they moved away from sort of traditional servicing of clients, now they actually manage the order flow and the orders for a lot of funds. And they'll help automate orders based on VWAP calculations. And VWAP is not something that has to be the same setting, but the good thing about it, when I say the same setting, it can be based on, you know, various time frames or aligned with other markets. But you'll often find evidence of automated trading strategies executing at certain VWAP calculations. Is there a way to see a clearer version of the mini video you showed? Yeah, sure. If you pop along to the website, right, which is linked here on the site, you'll see there's a section called watch what the better trading skills can do, and you'll find it in there. So just on how my trading works, I've got a number of real trading clips on the site. So it's taken from real footage. So it's in real time. So it's not me sitting there going, oh, if we'd done this and we'd done that, it's actually in real time. And you can see the breaking down of understanding what the market's telling you to do and then executing along based on what the market is doing in real time. Are there any more questions? So I think that's probably it. What I'd suggest is just make sure you've got that you've signed up for the tutorials. It's a free sign up, and that way you'll receive what I'm currently finding that's working in the markets right now. So for example, if I bring up a chart, see if I can bring this across. Can you guys see this chart on the screen? Okay, so I talked about VWAP. What we're seeing here is weekly VWAP. Now the market operates, this is the yellow dotted line. So the market, this is one of the benefits of trading one instrument, because your ability to, you've probably all heard the saying, think outside the box. Well, when you think inside the box, it forces you to, go looking for more things. And that way you uncover things that many more traders aren't aware of. And so you get an edge, which reminds me, I'll show you something else as well, just while I think of it. So big picture wise, so I'll come back to this VWAP, but it links into something else. Now there's a feature in NinjaTrader, and this is really cool. So have you guys heard of the commitment of traders report? Right, it's a report that is produced externally, but Ninja now has the ability to plot that. So if you look at this bottom section, this is plotting the data of the commitment of traders report. Now, you'll see dotted lines and solid lines. What we're seeing here is since December last year, we have the highest number of the solid lines represents the commercials, and there the green line represents them being long. Now you can set up whatever colors you like, but that's how I've set it up for myself. And the amateurs in the last 6 months have the biggest position of short traders. Now I talked about uncrowded trades and taking the other side of traders who, are less traveled along the path. Well, guess what's been happening to this group, right? So this report's current. This is the amateurs. Well, that's it there. All right. So that's what's happening to them. So that's a big aggressive move that has basically caught all these amateurs out. So I'll go back to this chart now. And you can probably see I'm saying to put multiple points of evidence together. So what I've noticed through the course of this week, of course, we've had a really big sell-off, is that weekly VWAP was anchoring the market to the downside, as you can see. But look how the market has actually been bought up, and mostly it's been initiated by some of the automated buying programs off the base of a second deviation. And then once it's got above, it's failed to come break it down further. Now, this white line, that's anchored VWAP to where this move started. So I've been able to be prepared for this and participate in it, in particular, once we got above weekly VWAP, and then look for a move. And if you have a look at the Aussie dollar, it's had a big move up to the upside in the last couple of days. All right, so that's an example of incorporating VWAP. And again, with the exclusion of anchored VWAP, everything I just covered there, they're tools in the NinjaTrader Orderflow Plus platform. And I'm not here to flog NinjaTrader. I've used it for over 15 years now. But one of the things that I really like about it is when I see a certain type of behavior in the market, and it might be something that's a new theme, then what I can do is make a note of it, and then outside of trading hours, it's really simple for me to go back and replay that. And if I want to, I can even try to work out how to trade it, because sometimes when there's a new algorithm in the market that I'm not familiar with, it takes some practice to be able to trade it effectively. Because where I'm coming from is all of my trades, I have like set plays, just like you do in sport. And so you build up an archive of those. I've got you come up with names for them. I've got the long liquid lunch, and another one's called the bread and butter trade, and all these silly names, but which mean something to me. And I know the conditions that need to be present to take that trade. Yeah, so if you're new to the journey, yeah, there is. So what I would say is the danger with trying to get into trading, and look, when I started, I was like a normal retail trader. And so my path led me into going into stockbroking and then managing money. And post the GFC, I wanted to focus more on intraday trading and then working my way into a prop firm. And the challenge for independent traders or retail traders is learning about what's genuine and how to go about making money. When you're in a prop firm, you typically have to sign, it was certainly the case for me, an NDA, non-disclosure agreement, because the information is key for that organization to make money. It's not, they're not going to go and put it out on a YouTube video for you. So, what I've done is basically offered the ability of traders to develop the skills of a proprietary trading firm. Right, but primarily my main focus day to day is trading, and it's one of those rewarding careers as long as you realize that it's also one that you do have to keep working at because the markets keep changing. All right, so if there are not any more questions, Tiffany.
Perfect. Well, I would like to give a special thank you to Adam of Boss Trading for a great presentation today. NinjaTrader ecosystem is pleased to sponsor these weekly vendor events as a value-added service for our clients. If you find value in these events, we hope you will attend them on a regular basis. We would like to remind you the information provided in this was of Adam of Boss Trading and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Again, we appreciate the time you spend with us. Enjoy the rest of your day, and we hope to see you in future webinars. Happy trading from all of us at NinjaTrader ecosystem. And again, thank you so much, Adam.